It's the end of the quarter, it's a new week for jobs data in the US, but all of the noise is going to be dominated by President Trump. Good morning and welcome back to Morning Markets here at True Potential. It's the end of the quarter, and before we look ahead to the economic data of the week, it's worth reflecting on the actions and consequences from President Trump's tariffs policy. Global equities continue to reprice based on the notion that the 25% auto tariffs are going to come in this week. That is, unilateral sweeping tariffs across all auto imports into the US. This is just the first sign of the verve for tariffs across the Trump administration. So-called Liberation Day begins on the 2nd of April, and there are profound consequences for stock markets. Tariffs are negative for growth. They're also negative for inflation in that they raise prices. This is the opposite of what is required for there to be conducive output for stock markets. So we've seen stock prices fall, but we're also seeing bond yields fall. That is, the prices of these bonds, US Treasuries in particular, are beginning to rise based on the notion that this will have negative consequences for growth across the US. And also we will see further disruption from Elon Musk's DOGE policy across public administration in the US, which takes us neatly to this week, given it will be full of employment data for the US. If we go towards Friday, we get the non-farm payrolls. And whilst the number may still be positive, it would certainly be a surprise for markets if it wasn't, we're likely to see a negative print within the government payroll sub-index. It had fallen to around 11,000 for the month of February. It's likely to be negative for the month of March. And we may actually see broader weakness within the overall print itself. We're also likely to see continuing distrust and uncertainty spread within the ISM surveys. These are the headline indicators for US activity for the months ahead. And we get both the services and the manufacturing data for the month of March. They're likely to show rising prices and also spreading uncertainty amongst the business intentions component. It's a toxic mix for growth and inflation in the US. We're seeing broader worries in other data in the US. Surveys for inflation expectations continue to rise, and that's with inflation still relatively low, around about 2.7% in the US. So we can already see these worries manifest in US economic data. The only other distraction this week would be European inflation data. And there's a similar problem in that European inflation is around about 2.5%. But that's where it's been for much of the last 12 months, and it's likely to tick higher because of fiscal spending being priced in Germany, but also tariffs policy has a global impact. That is, prices everywhere should rise as supply chains are disrupted from Trump's policy. So that's all for this week. There's a lot of data ahead. It's dominated by events in the US, but most will be dominated by what comes out from the White House. Please stay tuned through the week where colleagues will update you as progress evolves. Thank you.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.